Our next guest says the rally can continue. She's Stephanie Link, Chief Investment Strategist and Portfolio Manager at Hightower and a CNBC contributor. Always good to see you, Stephanie. Okay, let's play a little game of Would You Rather. Would you rather higher growth or would you rather higher interest rates?
Oh, gosh. I would rather higher growth and inflation not exceeding these levels. We have made big progress on inflation, Tyler. As you know, we topped out at about 9.1%. We're running in the threes. We all want to get to 2. I don't think we're going to get there because the growth here in the States is pretty strong, 3.5%. That's above trend. And that's driven by the consumer. That's driven by the secular stories that are happening in manufacturing, like onshoring and the energy transition. It's also a little bit of pockets of strength in housing, but it's also globally we're seeing strength. And I don't think that's getting enough attention. It's China growing 5.5%. It's India growing 7%. It's the Eurozone doing a little bit better, UK doing a little bit better. So I think inflation is going to stay elevated, but I would rather, to your question, I'd rather better growth with a little bit elevated inflation because that means earnings actually can continue to grow. And we know that stocks follow profits.
I'll touch and go that point one last time, and then I want to switch to India because it's interesting to me. But in other words, if you're willing to tolerate slightly higher inflation, roughly where it is today, that would suggest you're probably willing to tolerate interest rates roughly where they are today and don't expect a big series, certainly, of interest rate cuts beginning later this year.
Yeah, I mean, I don't think that we're going to see any interest rate cuts, and even if we get 1 or 2, that's not going to do anything really. We've put in place so much already at 550 basis points over the last 18 months. The point being is that the fiscal stimulus that has been put in place, over $8 trillion over the last 4 years, is more than offsetting the higher interest rates. So eventually we're going to slow, but for now we're growing and growing quite nicely. Do I think the S&P? Do I think it's going to grow another 11%? From here? We're already up 11% on the year, and we're up 37% in the last 18 months. So could we could grind higher, and that's kind of what I'm expecting. Nothing really very heroic, though, in terms of double digits growth.
Speaking of heroic, let's talk about Bill Brown. You think he's going to be a household name one of these days?
I do. I think he already is. And welcome back, Kelly. We haven't been on together since you've been back.
It's great to see you. Yes, likewise. Thank you.
It's great to see you. So Bill Brown was at L3 Harris from 2012 to 2020, and the stock was up over 400%. He has an outstanding track record. When he was at UTX, he was able to not only focus on growth, but also on margin expansion by 500 basis points in a 5-year span. So what I think he's going to do as the new CEO of 3M, I think he's going to focus on growth. He's going to focus on margins and focus on free cash flow. And to me, the stock is trading at about 15 times, kind of a trough-ish kind of a number. And that's cheaper than the market, and it's pretty cheap overall. They already cut the dividend, we know. The dividend yield is 3%. It's pretty good. So I like this story. I think this is GE 2.0.